welcome to Finextra. I'm Emily Haller and I'm here with Neyer of D&H, and we're at Cybos 2016 in Geneva. Thank you for joining me.
Pleasure.
The payments landscape is undergoing major change. What are those changes and what's driving it?
The driver is always the same, providing value to customers. The secondary driver is technology and standards. We see major adoption of ISO 20022. We see major rollouts of real-time payments. We see a bit more regulation with PSD2 coming after PSD1. And those three things are actually in a way interrelated. PSD2 is calling for increasing competition, and part of that is going to come through open banking, which will come through banks offering APIs to customers and third parties for more intimate relationship with the bank. On the back end of that, real-time payments will allow that relationship translate into immediate execution. And although we have immediate in the word, the key thing about immediate payments is really certainty. You know that it happened. So it's not just I can do it now. I can do it now and I know that it has happened. That is the really major thing that works for people. And ISO 20022 is providing that foundation of common conversation. We're in Europe and people speak English and they speak French and they speak German, but everybody speaks ISO 20022 to some extent, and that has really improved the dialogue. The one thing that also happens recently is there's been a lot more discussion about cooperation. So whether it be KYC registry coming from SWIFT or banks coming into consortia around blockchain or other innovation, there is a significant focus on what can we identify as a cooperative space and where can we pool our resources together as an industry to bring value to our customers.
20 countries have implemented or are planning to implement real-time payments. What are some of the challenges for banks and how can they prepare?
Great question, because now we really do have a lot of experience with putting in real-time payments and we have some real learnings. So one really important learning that we have is that top-tier banks typically join real-time payments. So if you look at Sweden, 14 banks, 10 banks. If you look at Singapore, 14 banks. If you look at UK, 10 banks have joined. And that typically allows banks to get ubiquity, the reach that they need to provide it to their customers. Now, in order to get to that point, what banks typically have to overcome is the fact that they were built for the batch environment, that they were built for, I run the batch overnight and I apply the postings next day and I make the funds available later. Well, as the world is speeding up, that is no longer good enough. You need to be real time, and what banks need to decide is how far in their infrastructure they go to make real time available. Because it really is a myth that it is all or nothing. That it is a myth that it costs $100 million to enable the bank to be ready for real time. It's all about how far you want to go. Because with vendors such as D&H providing stand-in processing, transformation, you can deploy a system like this at a fairly economical cost. Also, we haven't seen as much of it in Europe, but in other countries people are looking at payment as a service, and so second and third tier banks are looking for vendors to provide hosted solutions in a data center to, again, make onboarding quick and easier. Of course, in Europe it would be players like Equens who would be providing that sort of service. The other thing, once the banks get across the technical divide, the other thing they need to think about is customer proposition. If you're now doing things 24/7, are you offering your help desk 24/7? How do you staff it? How do you react it? If this is really a full STP offering, do you really even need a person? Or do you need to just provide the list of frequently asked questions, a link to the website and so forth? So each bank has to think about who they are and what service they provide to the customers. Also, real-time payments is a very horizontal service, so it plays in person to person, business to person, person to government, and again, banks have to decide which vertical do they service, all of them, some of them, and structure their offering accordingly. So there is a lot of exciting work that banks need to do about thinking about who they are and rolling out appropriate products. There is a lot of foundational work about enabling the bank for real time, and depending on how far you go, you can see the impact in other products. And from an industry perspective, what I see changing is what used to be known as a business day or banker's hours, 9 to 3 or 9 to 8 as these days, is really changing to be 24/7, and it really is changing the industry overall.
How does real-time stand to transform payments in the countries that adopt it?
I would like to say that it all worked out perfectly, and to a large extent it has. You can look at UK, where in 8 years they went from faster payments being 1% of payments to it now being 10% of payments. You can see happy people in Singapore splitting their check over lunch and using real-time payments to do that. So on the one level, the experience of an individual person is now much better, particularly in Nordic countries where there is a drive to a cashless economy. Real-time payments coupled with mobile has really enabled that societal drive, and so crime goes down, or crime changes from people stealing your wallets to people now forcing you to swish payments to their accounts. But since accounts are known, that is crime that is solved within 10 minutes. The other thing that we didn't really expect, but we do expect now, is a major change in the way business is conducted. So businesses are realizing much better control over their payables and receivables when those come in at an exact time that you know. You can do a request for payment and expect that payment to come to you right away. You can also rationalize your payments not just down to a day but down to an hour, and you can really match the inflows and outflows. And so for a small company struggling to make the payroll, ability to make the payments just when the receivable from the vendor came in is a major help. And then we have things like Zaps, where people getting into e-commerce and m-commerce. And we expect that with SEPA Instant coming on board, the same things will occur in overall Euro-based continental Europe, with my bank now getting more traction because the payment mechanisms becomes more seamless and more certain, and with innovation flourishing.
There's been a lot of discussion around blockchain technology. In what areas or use cases are you seeing the potential for blockchain to be a major disruptor in the industry?
Completely agree that there has been a lot of discussions, and some people even say that there's been too much discussion and not enough doing. Yes, as being impatient, we would agree. I recently wrote a paper, and the way I structured it is that I look at 3 horizons having to do with the maturity of technology. At this point, technology is mature enough for what I would call Horizon 1. Problems where there is where there's low inertia, and by inertia we mean small number of participants, not very complex processes, and fairly low velocity. So small volumes of transactions, low velocity of change. So if you take something like trade reimbursement that currently requires 3 or 5 participants, takes 2 weeks to occur, that is a perfect case. Now, if you go out to something like cross-border payments, cross-border payments may require hundreds of thousands of participants, requires speed of minutes or half hours. And so in my mind, that is Horizon 2. And Horizon 3 is something like security settlement. Security settlement is incredibly complex business processes, very entrenched participants, incredible volumes. The technology just isn't there to support that, which is perfect because technology will mature as you go through Horizon 1 and Horizon 2, and so by the time Horizon 3 is ready, technology will be ready for that as well. So to recap, right now, focus on smaller, manageable things that you can get done with a small number of participants. Also focus on things that require communication. Trade reimbursement requires multiple people to come together and communicate. Sort of similar things like that would be good examples. And so what we're seeing is it's not just in the financial area. Believe it or not, music copyright is being disrupted by blockchain. People are trying to put Uber-like logistics on the blockchain. So again, there is a lot of discussion, but here at Sibos, where we're financial industry, it is about cooperation, sharing data, and sharing simple business processes.
Gene, thank you very much.
It is my pleasure. Thanks, Emily.
And thank you for watching.